Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. Good morning, Yogesh.
Morning, Devina. A flat day of trade anticipated and not surprising considering the kind of close that we had yesterday as well and how the US markets are done.
Yeah, not much actually. They've all been down under, not many cues coming in from Asia as well. But I think the bigger worry is going to be what happens with Cyclone Fani and, all that's anticipated. It's just a few kilometers away from Puri, Gopalpur, just about 65 kilometers away from that. So it's going to be, a worrisome watch.
Yeah, from a humanitarian perspective, certainly. And from a markets perspective, though, Devina, it'll be very, very interesting to see what some of the FMCG leaders do today. Because after Dabur's numbers yesterday,
HUL reports its numbers.
HUL and Godrej Consumer both come out, so that is one important
and
set
volume
of
growth first time in 6 quarters in single digits for
Yeah.
HUL. That's the expectation.
So that's one. And IT, yesterday a bad day, and Cognizant cutting guidance, also not pleasant.
Bearing down on what could be yet another day of pain for some of the IT names. Infosys, in fact, was a bulk of the cut that came in, about 2.5% for Infosys in yesterday's session. But let's take a look at what's been happening with regards to the futures and options space. Yesterday was a very tight range. I think 11,700 to 11,800 is where bulk of the additions happened. Agam Vakil is joining in for more details. Agam.
That's right. Well, it was a range-bound session yesterday, and what we've seen is unwinding in open interest for the Nifty futures. As you can see, a decline of 2.7% in OI. The Nifty banking futures as well have seen a drop of as much as nearly 5% in open interest. Coming down to your India VIX, that has risen further by 5% at around 23, and your Nifty put-call ratio as well has come off to around 1.38. In terms of levels, we are keeping once again an eye on around the 11,700 and 11,800 mark, considering the options have been most active around that, that zone. And moving on to so this of course is your 500-point range. But moving on to stocks, we are keeping an eye on Jet Airways, again on expected lines, considering the surge in OI that we've seen. A lot of shorts building in. It has moved into the F&O band. But among other stocks, we'll watch out for Apollo Hospitals and Ajanta Pharma. Very, very sharp changes in open interest. And in terms of unwinding, again, we're taking a look at stocks like Canara Bank, Kotak Mahindra Bank, looking at short covering, as well as something like a Ramco Cement. So keep an eye on that one. Mixed day of trade, something we can expect even as we move into trade today.
Okay, thanks a lot for that, Agam. So we'll watch out for all of these pockets of trade. Some important monitorables, of course, in terms of what individual stocks will do, not necessarily based on numbers alone, but based on what the sentiment yesterday was. By the way, we're talking about consumption and what HUL or GCPL could do. Even the paint companies and what Kansai Nerolac has done leaves a bit to be desired, right? So it's showing some chinks in the armor, the paint space as well, the entire consumption bucket.
Profit down 12%, and yesterday it was 5% lower. In fact, immediately post the numbers, you saw that sharp cut coming in on the counter. The other pocket, obviously, while we've been tracking how auto sales numbers have been shaping up, two big names, Tata Motors and Hero MotoCorp, with their numbers, 17% drop in volumes for Hero MotoCorp. Tata Motors also on, the domestic sales has not really, cut the mark. So it could be a day where individual pockets could see pain for various reasons.
Yeah, and one would wonder at some point of time as to what whether the market thinks of this as an aberration and sticks to the multiples that the consumer companies across the bucket enjoy, or would there be a pullback in those multiples as well? Not just the earnings, but the multiples downgrade could lead to some further pressures. But too soon to talk about it, I guess. Specific
to the FMCG, actually.
Yeah.
And we saw what Britannia also did yesterday, down closer to about 3.5%. But lots more to talk about with our guests once they join us. In the meantime, let's go across to our research team. All of them are ready with us to take us through what could impact stocks that are in the news. Then we just highlighted Tata Motors and Hero MotoCorp, and Godrej Consumer Products reports its numbers as well. Mishika, let's start off with you first on some stocks and news.
Yeah, so first we'll have a look at the important earnings. Larsen & Toubro Infotech came in with a weak set of numbers. The revenues are up 0.5% at 2,486 crore rupees. Dollar revenue growth is 2% at $354 million. Net profit is up 0.9% at 379 crore rupees, and EBITDA is down 7% at 437 crore rupees. Their margins currently stand at 17.6% compared to 19% last year. Then we have Tata Power, which came in with inline numbers. Their revenues are up 0.2% at 7,230 crores. Net profit is down 96% at 58 crore rupees. EBITDA is down 1.5% at 1,349 crore rupees. And margins stand at 18.7% compared to 19%. There was an other income of 186.7 crores in the current quarter. Also, there was an exceptional gain in the base quarter worth 1,886 crores due to reversal of impairment of the Mundra plant. Then we have HDFC Life Insurance. Promoter Standard Life will sell up to 3.6 crore shares, which is 1.78% stake in the open market. The floor price is set to be 390 rupees per share. The seller proposes to sell these shares on May 3rd to the non-retail investors and May 6th to the retail investors. The floor price is at a discount of almost 7% to the current market price. And lastly, we have Yes Bank. RBI approves extension of tenure of Brahm Dutt as part-time chairman of the bank till 10th January 2022.
All right, Mishka, thanks very much for that. Yatin, disappointment again. Tata Motors domestic numbers, Hero MotoCorp also a big drop.
Yeah, so Tata Motors versus expectations also, Devina, we have seen the numbers come in slightly below estimates. If you look at Tata Motors' total domestic commercial vehicle sales and passenger vehicle sales in the domestic market, they were down nearly 20%. The sales figure was a little over 42,500 units. Of course, if you also look at the export markets, they were also down by nearly 53% on a year-on-year basis for Tata Motors. So if you look at the April sales, quite weak as far as Tata Motors is concerned. Hero MotoCorp also nothing different, but largely in line with the street expectations. Hero MotoCorp's total April sales came in at 5.74 lakh units. That was a decline of nearly 17% on a year-on-year basis. The Bloomberg Quint poll was suggesting a drop of nearly 16.5%. So broadly, Hero MotoCorp has met the street expectations as far as April sales are concerned. But as you mentioned earlier, all of the auto sales which have come so far have shown, some kind of weakness, be it the domestic market or the export market. So clearly, things look slightly sluggish for the month of April for most of these auto players.
All right, so it's definitely going to be a worry this time around. Agam, Godrej Consumer Products, last quarter, big drop in the prices post its results.
Right.
This quarter, what's expected?
Well, again, Devina, we're likely to see it, move in tandem with its peers so far, because we're not expecting fireworks for this particular quarter. However, there will be a base effect, which will come into play for as far as Godrej Consumer goes. So, starting off with your revenues, we're likely to see about 3.5% gain there. We're likely to see margins come off to a certain extent, just a tad, to around 23.3% against 23.6%. Net profit seen down 32% at 419 crores, but this is because of an exceptional gain in the base quarter, which is of around 193 crores. But on the whole, we have to remember that the company is going through a lot of challenges, not only in India, where there has been certain slackness in demand when it comes to the entire industry, but also some of its international markets where demand has been quite volatile, specifically Africa and Indonesia. So we'll be watching out for those factors as well as far as GCPL is concerned.
All right, guys, thanks a lot for that. So those are all of the stocks that you can keep an eye out on as we start off trade this morning. Yogesh Mehta of Motilal Oswal is also joining in right now on the show. Yogesh, good morning to you, and I want to come to you straight up with Hindustan Unilever, Godrej Consumer Products and the expected results today. So the volume number has been a pain point, and it's been a trend across the board where we've seen subdued volumes this time. Is that going to be a big worry?
Good morning, Devina. Overall, for FMCG, the way we have seen in Britannia, though the margin growth is not a concern for them, the volume growth is not a concern for them. But Dabur, we have seen after, they're still struggling for last 5 years, and it is making only a higher single-digit volume growth for last 5 years. This time we have seen a beat. Godrej Consumer again, as Agam mentioned, that Latin America and the Indonesian business is the guidance needs to be watched out for. The other thing is margin, the profit margin and the EBITDA margin are going to shrunk by almost 70 bips to 120 bips. Volume on the top line number, we don't foresee much of a growth. It will be a flattish kind of a growth, and PAT may decline by 6 to 7%. So this concern remains there because of the competitions, and they are struggling to grow the business further, especially in the shops for Godrej consumer. Hindustan Unilever, again, maybe we may see a revenue growth of 9 to 10%, not much into that category. Again, the rural consumption is showing that the upper trajectory for volume growth is now showing that clouds of worry are there for further growth. So probably that contraction may not happen for Hindustan Unilever for now, and Patanjali is not able to compete Hindustan Unilever so far. Only Dabur is a concern, and plus Godrej Consumer to a certain extent. So there, Hindustan Unilever, we don't force that much of a disappointment should come from the numbers, and we are expecting almost gross margin by around 53.5%. So we don't foresee any worry for Hindustan Unilever as of now.
Yogesh, what did you make of the numbers of Blue Star? Optically, they've reported exceptional numbers. Do you guys cover that one, and what's the reaction expected?
Neeraj, to be very frank, I have not seen the numbers in detail or on the surface side because could not get the time for that. But we have a soft coverage. We don't have that in-depth coverage for Blue Star. So won't be able to comment there.
Fair call. But the numbers optically seem pretty interesting. Let's wait and watch what happens there. The other thing is the weakness that we are likely to see, Yogesh, today in HDFC Life because of the offer for sale that will happen. Not dramatic, but maybe 3% lower. But at 417, 418, where HDFC Life is, or at 300 or at 400, where the stock might come down to today, is it worth buying into HDFC Life, or would you prefer some of the other insurance plays?
If insurance play needs to be compared, then SBI Life, HDFC Life and ICICI Pru, these are the three names where one should look at as an investment. Now, since Standard Life is offloading their 1.78% stake on today and on Monday, so probably again they have done that in last month or so, around 10 crore shares they have offloaded at 365 to 367 range, and then the price has again bounced back. So demand is enough there. So I think this will get easily absorbed, and insurance penetration, I have multiple times commented here that the penetration level is so low that the competition is also very low. There are very few players in the private place as well as the PSU side. So that market share and wallet share game will remain here as in the banking, and day by day we may see that incremental penetration, uptick in penetration, that will drive the business. Even new business premium is showing a growth rate of 20 to 24% in SBI Life and HDFC Life, where it's marginally lower in case of ICICI Pru. So I think that again Standard Life is offloading shares, and again at higher price, almost 7-8% higher than the last stake sale. So that shows that demand is there, and enough confidence for the growth in this business is visible with that. The only concern is they are selling this only without any concern that it needs to trim down the stake to 75% post IPO. So by this 1.78%, they will be very well below 75% benchmark.
Yogesh, what was the top stock in the morning meeting today when you guys were thinking of what is the one that will have the biggest reaction or is the best sell or the best buy today? What was that? What was that name?
Best sell or best buy, so it is not like that, but though corporate earnings season is on, so we have been discussing the numbers. Out of that, Britannia again with the Nesvadia, but stock is already down by 3.5% yesterday. So there is no much of a downside. I would believe that if there is any downtick further in Britannia name, then stock has already corrected from 3,400 to now 2,800, below 2,800. Would be good opportunity again to lap into the stock because we see that 20% CAGR growth over next 2 years, FY20 and 21 right. Both, and Yogesh, there is no downtick.
Yogesh, if I may come in, the concerns yesterday too were not about the earnings any which ways. It was about what happened on the con call and maybe some clarity. I think it spread like wildfire amongst the WhatsApp groups. What have you made of those intercorporate deposits and what impact that could have on Britannia, if any?
That also we have discussed that intercorporate deposits and the difference which is there, difference which have been raised there in the con call, it will not have any material impact on the stock price because it will be taken care of. We have had a detailed discussion with the management, so we don't foresee any further negativity, and post that we have come out with the decision on the discussion that it would be a good opportunity to buy. The other thing is Dabur, other stock is Dabur, which has been discussed. There is a margin disappointment, growth disappointment across the board, and we believe that the growth rate for FY20 and 21 would not be much, would be in the range of again lower single digit. So there we have downgraded to neutral with a revised lower price target. So it seems that around this valuation of 40-42 again the downside is still there. So we will be avoiding there, or one can look at traders can look at going short there.
What are you advising clients, Yogesh, in terms of where to start investments afresh if they don't have existing positions?
At this juncture, it is difficult, but yet looking at the numbers which have been disclosed, which have been announced, their DCB Bank, Bajaj Finance is yet to disclose, come out with the numbers, where we see that 45 to 45 is 47% growth rate in AUM, and the profit will jump by 45 to 50%. There we are still going gung-ho about that Bajaj Finance. So if anyone is still looking out for investment and having cash, can deploy some into Bajaj Finance, some into DCB Bank, on decline RBL Bank, and corporate banks. Again, Axis Bank has come out with fantastic set of number from loss to profit, and ICICI Bank will disclose their number on Monday. So post that we may take a call because we were buying from 320 to now it is 400, near to 400. So we will be taking a cautious step there. Post result we will review that, and and apart from that, private banks, still HDFC Bank remains the darling there.
Okay, that's HDFC Bank, but the stock nonetheless over the last 2 or 3 trading sessions has really come up. In the last 1 month though, not too much, but the last 7 days, a good 5%. So it's not looking all that bad for HDFC Bank. In fact, being the heavyweight that it is, that's what's probably lending some support to the Nifty, which on Tuesday's session and on yesterday's session just saw minor cuts by the end of the trading session. Talking about we'll try and get our technical analyst as well in just a few moments. I think Shrikant Chouhan, he'll be joining in just a few moments and getting some sense as to what exactly could the trades look like this morning, because we've been seeing volatile swings all about the place. Tata Motors for one. Yogesh, I want to come to you. Pain continues for this one, and disappointment in the volume numbers keeps coming in month on month.
Still, but I would say that the China factor still needs to be watched out, but US number which have come is 10% higher. Domestic was uptick because of the new launches like Nexon and Hexa. That has given a spike into domestic production numbers. But again, that has been now over, and we have seen again a decline of 20-22%, where other automakers are also facing the heat there. So I would say that on the external factor, the stock price have risen 50-60% from the bottom. But again, I would say that at a fresh approach, one should stay cautious on Tata Motors, because again, at the result eve, we may see some kind of a reaction, because result will not be that great, and again, ambiguity will be there again as it is in every quarter.
Okay, we'll watch out for these names as well. Actually, Hero MotoCorp left a bit to be desired, to be honest. Yesterday, the two-wheeler stocks were up and active, so it'll be interesting to see if there is a bit of a negative reaction that comes into some of these names today, at least Hero MotoCorp in particular, which was up. Actually, Tata Motors too, unless I'm very wrong, was very, very active in trade yesterday, was Tata Motors. So it'll be interesting to see what happens to that stock too in the session today. But Hero MotoCorp in particular, because Hero and Bajaj charted a very different trajectory in trade compared to TVS Motors. TVS was down at a point of time about 7-8% and then went up. This is Bajaj Auto up 1.5%. TVS Motors off the lows of the day, but still down about 2.5%. And Hero MotoCorp too ended the day about 1.5% higher. So there was dichotomy between the two-wheeler companies in trade yesterday. Let's wait and watch what happens in the session today. However, time now to get our technical experts on the board to try and talk about how to approach trade this morning. Shrikant, Chouhan, Senior Vice President for Technical Research at Kotak Securities with us, as is Rahul Randeria, Independent Market Expert. Gentlemen, both of you, good morning. Thanks for joining in. Shrikant, if I can start off with you, what's your approach to the Nifty this morning? Are you trading the Nifty or the Nifty Bank this morning?
Good morning, Neeraj. Good morning, everybody. For Nifty, yes, we have a very clear view that the stock is, the overall market is in the range. It is not going beyond the range. 11,650, 11,800. These two important levels are for Nifty, and it is clearly failing to cross these levels. So if there is any lower opening because of any reason, then close to 11,700 we should look for adding long position in Nifty as per spot levels, and here we can keep stop loss at 11,650. On the higher side, again we can expect 11,800, 780. If we see the market is crossing 11,800 decisively, then we can expect further more activity, and broadly we are of the view that market is on the verge of going to cross this 11,800 levels. Neeraj, the reason is because very few stocks are participating in this market is right, but all these 5 stocks are showing a lot of strength, and they are like supporting to the market whenever there is a weakness or whenever there is a panic in the market. So all these top 5 stocks like ITC, HDFC Limited, Reliance Industries, TCS, Infosys, they have very huge weightage in the market, and if we go through with long-term patterns, I mean to say patterns on weekly or monthly basis, then after almost 12 months, they are approaching to their previous highs, so which is again positive for the market, and that is why we should look for adding long position on Nifty.
Rahul, what's your approach to trade today?
Yeah, good morning, Neeraj. As we have seen, the Nifty last couple of days has been trading in a range, so one has to take call depending upon the market trend on intraday basis. So definitely yesterday we were buyers, and today looking at yesterday's closing, I feel that for intraday there would be a sell call from our side. First, we have a sell call in Nifty on rise to 11,757. Downside intraday target would be 11,653. Stop loss would be 11,801. Second call is in sell in Bank Nifty. One should sell Bank Nifty on rallies to 29,800. Intraday target would be 29,500 with a stop loss above 29,977.
Okay, that is a call coming in on the Nifty and the Nifty Bank. Let's talk stocks then, and what would your recommendations be this morning?
Yeah, stocks I have considered in 2 buy calls. Both are positional calls. First is a buy call in Ashok Leyland. The stock has, after a correction, yesterday stock has given some sort of support at the lower level, supported with strong volumes, and has tried to inch higher. Definitely the volumes are encouraging, so we could see a swing from towards the upside. Definitely traders can buy in the range of 89 to 87. Upside potential target is 95 with a stop loss below 85. Second buy call is in Torrent Power. Again, yesterday we have seen an engulfing bullish pattern supported with volumes. Definitely on intraday basis, one can accumulate on dips to 254. Upside potential target is 271 with a stop loss below 247.
Okay. Shrikant, what about your stock ideas?
See, technically we feel that we should focus on those stocks which are not exactly parallel to the market, but those who are really having very high beta and doing well since last almost 3-4 days. We like India Bull Real Estate, which is around 16, 17, 116, 117 levels. There we feel that it is into a strong uptrend. It was into some consolidation mode since last 2-3 days, but after hitting the levels of 115, 116, again I am expecting stock to move towards 125, 130 sort of levels. So it's a buy at current price with a final stop loss below 113. The other stock which we like is from the metal space, JSW Steel, which is trading around 306, 307 levels, having very good support close to 300 levels. So here we can keep stop loss at 298 for buying JSW Steel, and we can expect close to 318, 320 on the high side. So metal space is really showing a lot of volume, open interest built up, volume expansion as well as price expansion activity.
Okay. Yesterday, Yes Bank saw a marginal recovery after that big drop of 30% that we saw in Tuesday's trading session. Ended the day higher by about 3.5% at 173. Nonetheless, can we expect a slightly bigger upside, Shrikant, from a trading perspective?
See, for Yes Bank, it was like down vertically from the highs of 285 to 290, and it went to the levels of almost 160, 165. So yesterday the recovery was there, but we feel that it's a dead cat bounce kind of activity because the fall was like completely vertical. So yes, we may see some levels of 180, 185 on the high side, but ideal strategy should be to stay away from it, because I'm of the view that the way the stock has fallen, at every resistance selling will come, and if it fails to come to the point of resistance, then the selling will be much more forcible. So it is better to stay away from the stock for the time being. But if there is any long positions, then one should look for exiting at resistance level like 180, 185. There are like other stock in which like we can focus, like Axis Bank is there, DCB is there, ICICI Bank is now correcting, State Bank is already trading at its important support area. So there are a number of stocks. It is better to stay away from Yes Bank, at least for the time being.
Well, fundamentally, Yogesh, you guys were proponents of Yes Bank, or maybe not proponents, but I know that the dealing desk as Motilal Oswal had got a lot of flows when the stock was at about 170, 160 3 months ago. From there, it charted its way up to 260, 270. Now it's come back. What's the fundamental call here?
Neeraj, post the result and the ruckus of everybody is so talking about the exposure towards different corporate groups, which may pose a risk to them. But what we foresee is that even after writing off, if there is at 50% discount even, the book value would be in the range of 130 to 140. So in that context, everything is priced in. 1 month back, it was a new board chairman has taken over, and that was all been welcomed. And again, that point in time, the same thing was known to everyone, but it was in a hindsight that point in time. But what we believe is from current level again, one can start accumulating the stock, because near to 1.2 to 1.4 times price to book. So it leaves very limited downside, and we may not see any further jerk from here in the disclosing any kind of exposure towards any of the corporate groups apart from which has been discussed. So I think personally also that around this level it could be a good opportunity to buy. You may see that 3 months, 4 months, or maybe 1 year down the line, again people will forgo everything, and everything would be written off and will be cleaned from the balance sheet, because the new management which has come over, they are writing off from the day one. Otherwise, we have seen this in ICICI Bank also, in Axis Bank also, that writing off strategy happens. Even in SBI, PSU Bank, we have seen that whenever they come, they want to clean the book at one go rather than taking it over in installments. So I think it's a good step, and near to 1.2, 1.4 times price to book, it would be a good opportunity again to get into the stock, and you may see further uptick maybe in 1 year down the line. I cannot comment about 1 month or 1 or 2 months, but yes, the memories of the people and traders are very short.
Okay. The other one, and we spoke about a lot of auto names, but Escorts has to be viewed with a perspective at about 1,000 odd or close to 1,000 odd. A bunch of buy calls out there. Almost everybody believed that these growth numbers would last, and therefore the street was very, very bullish on Escorts. The 1 year return is south of 25%. I think it's lost about 29 or 30%, and a significant portion in the last 6 months. For one of the best tractor companies to lose out so much, and look at that, the return potential after the correction that's happened, the last 12-month returns is about 29%. The return potential is about 28 odd percent. So the street's still bullish with 66% buy calls. The question only is that with the kind of numbers that they're coming out and the sentiments that are there, would people want to go out and bet on a tractor company? Economy showing first signs of slowing down in the finance ministry's words. We've talked to a lot of other people. They'll say that those indicators were already suggesting that we were down and out, right? Yeah. Or not out really, but down substantially. And that in that vein, would somebody want to go out and bet on a tractor company right now when the going is uncertain? That's the key question.
Right, and ahead of the monsoons as well, while we have predictions of a near normal monsoon, whether or not that actually works in the favor of these tractor manufacturers is something.
Yeah, you know, Devina, the other interesting bit was that conversation with Suhasari Narayan of JM Financial when they did that rural safari. They were saying that a lot of people are holding back their purchases before the election verdict comes out. You don't normally see this from tractor and farmers, because farmers tend to buy the tractors for the tilling. But even they are holding back their purchases. And that's the other interesting bit as to what could happen to both M&M and Escorts in particular.
Yesterday particularly wasn't a great day for Escorts. It was down about 8.5%. But it looks like it's not just one particular segment, be it two-wheelers, be it four-wheelers, be it tractors. They're all in the same boat at this point in terms of the overall sentiment around them and what's been happening in terms of the lackluster volume growth. But we've got 2 minutes left to go for market pre-open. Quickly, Rahul, since we were on the topic of Escorts and since it fell 8% yesterday, would there be a trade there?
Yeah, if we see the consistency last 3 to 4 weeks, the stock has been under pressure, and even we have recommended a sell call around 784, and still we have not reversed it. But definitely, currently, some more downside is there. Maybe we could see the stock testing the levels of maybe 655, because that was earlier that was a resistance that could become a support. So that would be the area where one can buy for a technical pullback. So definitely I would be looking out for 655 area, which would be acting as a good strong support area for a technical pullback. So I am looking out for some more downside from the current levels.
Okay. Yogesh, just one quick perspective on McLeod, Russell and Everready. Quick 60 seconds. Do you guys have coverage there? What have you made of the downticks that we've seen?
Neeraj, we don't have coverage on both either, but I think they are quite laden with the debt, and the the rating has been again downgraded. So that gives, and I don't foresee that the business has anything much to left into this. So around 105 also, if anyone buys, I don't know why, but it leaves no room for them to earn much of businesses there, because we don't foresee any growth in last 2, 3, 4 years. McLeod Russell being the largest producer in the black tea segment and the rubber plantations, but yet the stock is perennially down from 200 odd level in 3 years, 4 years to now 50 odd. So that leaves no room for investors. One should avoid clearly.
30 seconds to market pre-open. It looks like it's going to have a slightly more flattish open for the indices. SGX Nifty though has bobbed its head back into the green. From the last time that we took a check, it was just about marginally in the red. But no major cues coming in from there. Going to watch out individually for stocks and performance ahead of numbers for Hindustan Unilever and how that one opens up for trade. Along with that, Tata Motors and a Hero MotoCorp on those disappointing auto sales numbers. That could see a slight bit of a negative pairing today. Nifty 50 opens positive, about 0.25%. You've got the Sensex opening up about 0.5% right now. Coming back to individual prices on stocks then. Tata Motors is showing you a 5% initial cut in pre-open. GAIL, that's down about 1.8% right now. We've got Infosys. Yesterday was one of the prominent losers in the IT pack, because of which you saw the IT index itself drop about 1.8% today. Yet again, and Cognizant's lowering of their guidance is really not helping the IT pocket. Ultratech Cement is the other one that's down, and Dr. Reddy's Hero MotoCorp losing some steam. Taking a look at the gainers, after Yes Bank's 3% move yesterday, today yet again it opens positive, about 3% for Yes Bank on the upside. 179 is where it's come to. HDFC Bank continues its good performance, now at 2400 at pre-open. IOC, BPCL, Reliance Industries, so 3 oil and gas names there at the top in the top 5 list, and an ICICI Bank also at about 1% or so in the trade. The currency, 69.34 is where it's at, so not a major change from yesterday's close.
We'll give these rates a chance to settle. Just 2 stocks that I want to mark. Blue Star, likely to start off higher. Very strong numbers. Let's see if it does that. And maybe watch out for Everready and McLeod Russell and Bombay Dyeing. 2-3 stocks that have been clobbered. Maybe they might just bounce back today. Let's wait and watch. Let's give these rates a chance to settle down, and then we talk more about them a bit later on. The other one is a question on Jet Airways. Let's work with the presumption that again starts off lower today, because it had a very tough day yesterday. If somebody has it in the portfolio, Yogesh, do you believe that it's now arriving at prices wherein there could be a contra bet taken on Jet Airways, or is it too difficult to do that?
Though I don't haven't looked into the balance sheet numbers, there is nothing to look into. Earlier also in my conversation, I have mentioned that there would be a good opportunity for other players if somebody has to take a contra bet, and Indigo from 1300 to 1540, and even SpiceJet from 100 to 140. What I would suggest, I would say that my opinion, still Jet Airways, the power is in buyer side, bargain power is in the buyer side. So probably that will still have a dampening situation for Jet Airways. And it's just a hope trade. Probably one fine day it may happen, but day by day it may give deterioration further. If at all any buying opportunity for dead cat bounce, that's a different story. But again, market share wise, Indigo or the SpiceJet or any other carrier would have better advantage. And crude prices here and there is always a cyclical one.
Okay, Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us today. I appreciate your time. Quick thoughts from Laurus Labs. The net profit from the business has declined 50% in the March quarter. Higher costs seem to be the major factor at play. But to help us understand the numbers in greater detail, joining us on the phone line is Mr. Satyanarayana Chava. Mr. Chava, thanks so much for joining. He's the founder and CEO. What's happened in this quarter? Why have the margins come off so much? And I think in turn has impacted the bottom line performance.
The Q4 was very transformative. I don't know why you are not giving that credit. If you look at Q3 to Q4, we improved our EBITDA margins by more than 1%. Our revenue went up significantly. And all divisions contributed to our top line as well as bottom line. See, the decline in the margins when you compare to the corresponding quarter, Q4 of FY18, there is a decline. That was primarily because we increased our R&D spend. If you look at our numbers, we have spent more than 7% of our sales on R&D. That was primarily because of our focus on filing ANDAs and filing registrations in Europe and development of around 10 ANDAs every year. That was the primary reason for our decline in margins. It's only because of our increased spend in R&D. Otherwise, our gross margin level, we are reasonably good. Yeah, there is no significant impact on the gross margin level.
Okay. Well, that's good to know. So then let's, since the markets are open, sir, we don't have enough time, but just wondering, what is it that you can guide to for the year as a whole? I heard you mention that if I look at Q4, compared to Q3, it is done okay, but Q4 versus Q4 is not. So let's stop looking at quarters. Let's talk about how FY20 as a year could shape up.
The FY19, that was very transformative for us. We invested very heavily into infrastructure, very heavily into product development. All those started yielding benefits, and it was seen in the last quarter. And this quarter onwards, that means in FY20, all units will be cash positive. And all divisions will contribute not only to the top line, but also to the bottom line significantly. So one could expect FY20 will be very, very good year for us. And we expect to improve our EBITDA margins closer to FY18 for sure. That means not FY19. FY19 was not a good year for us, but FY20, we expect our EBITDA margins will improve closer to FY18 for sure. Yeah.
Okay, we wish you all the best for that, sir. Thank you so much for taking the time out and giving us that quick synopsis. Margins might improve back to FY18 levels. That's the key comment that is coming in from Laurus Labs. This quarter wasn't the best. Let's wait and watch if the quarters ahead improve. Okay, while we wait for arguably the most important phone of the day, and that is an update on Cyclone Fani, and IMD should be joining us any moment. Deven Choksey of KRChoksey is with us. A quick update from Deven as well. Deven, good having you. Thanks much for joining in. A packed show, but the one key monitorable and something that we were talking about last week as well, oil. You were right that you didn't see it move higher. It hasn't moved higher. It's moved lower. At 72 a barrel, immediate sentiment impact on the oil-related companies. What do you think could happen?
Good morning, Neeraj. Well, as I was making a point even last time, and I still believe that I think it's turbulence is not good. I think in oil price, turbulence is not good for any player, I think, who are consuming oil. OMCs probably, I think, have a mechanism to pass over the cost. That is a different issue. But I think the inventory losses, I think in the given quarter when do you have such kind of, I think, fluctuations happening in the oil prices is certainly not good for the OMCs. I am particularly not very enthused with the way in which the oil prices are moving currently. My strong belief is that I think the oil producing countries would be very well off, I think, if they get 65 to a barrel, 60 to 65 to a barrel. I think if they get as a realization, they would be very happy with that. Anything over and above that, if they try and create a greed for it, probably I think they will ruin the prospects for themselves. Certainly not a good news if the oil prices remain firm at a higher level due to supply constraint. In my viewpoint, I think these supply constraints, I think, cannot be living for a longer period of time, because both Russia and America, both of them are creating higher amount of production, and America particularly has a higher amount of inventory too. So from that perspective, I believe that I think the oil prices will remain softened in the $60 to $65 range, and probably I think it will provide breather. Should that continue for some time, then I would think that OMCs would have relatively steady performance to talk about. But in a given situation at this point of time, I'm not too sure whether I will bet on OMCs.
Okay, that is the oil marketing companies and the oil and gas pack as a whole. But Deven, today's focus is going to remain on the FMCG pocket as Hindustan Unilever reports its numbers. Volumes are expected to come in single digits for the first time in 6 quarters. What's your sense as to how there's been a struggling and a laboured volume growth for the entire pocket as a whole?
So on one side, I think I'm not doubting the consumption story benefiting the FMCG companies. I think they will, in some pockets or other, I think they'll continue to gain the benefit out of the consumption, which continues to remain robust. However, on a quarter-over-quarter basis, if we are talking about higher volume growth, probably we must also understand that I think in a given quarter, you also had a situation where in some amount of tax adjustment, GST rate adjustment which has happened, which probably would have impacted the sales to a certain extent for a few days, and that could have its impact in the given quarter as far as the working is concerned. Fortunately, I think the prices of raw material, the input cost haven't increased very high. Maybe I think in some segments in which they are operating, probably you would find a little impact of I think the cost coming in. Overall, I expect I think no major gain in the profit performance of any of the FMCG company. Britannia came up with a result, I think decent set of numbers, but nothing extraordinary. I guess I think the same should be the situation for most of the FMCG companies in this particular quarter. So no excitement, but yes, I think they will have they will continue to report relatively steady performance because of I think consumption demand remaining strong in the rural economy in particular.
All right, Deven, just stay on with us. 1 million people have been evacuated and schools and colleges shut down along the east coast of India as Cyclone Fani moves into land. The Bhubaneswar airport has been shut and operations in Kolkata airport will also be affected today. The cyclone, in the meantime, has started making landfall in the coastal town of Puri. Joining us now on the phone line is Mr. A.K. Srivastava of the Indian Meteorological Department for more. Mr. Srivastava, thanks very much for taking out the time. Can you update us on what is the latest development?
Hello.
Yes, Mr. Srivastava. Can you give us the latest update on Cyclone Fani?
Good morning. Thank you very much. The cyclone Fani is likely to hit in a short while ago. We expect within 1.5 hours it is going to hit between Puri and Chandbali.
So,
hello.
Yeah.
And of course, the cyclone was pretty long time over the sea. Its travel was almost 7 days. It's quite strong, and we expect that it will be one of the severe most cyclone in last 20 years or so. And once it will hit the coast, around 200, we expect the wind speed around 200 km per hour. And of course, the wave height would be around some 15 meter or so. So it is a very, very strong cyclone, what I say.
As per initial assessment, any predictions on how long the landfall could last?
Usually, after 4 hours, the cyclone weakens after landfall. Its intensity as well as the wind speed, it all decreases after 4 hours or so.
Okay. And just to get in a sense from you, around what time are we expecting it? I believe the last update was closer to 11 a.m.
Yeah, that's why I'm telling you. We are expecting within 1.5 hours to 2 hours.
All right, Mr. Srivastava, thanks very much for joining us with that update on Cyclone Fani. Remember, this is touted as the most severest of tropical storms in the last 20 years since the super cyclone of 1999. So, and as he pointed out, tidal waves as high as about 15 meters, wind speeds of more than 200 kilometers per hour. There is a mass scale evacuation that has already happened. 1 million people have been evacuated from coastal regions to reduce or probably have as low as 0 casualty. But nonetheless, there are a lot of assets along that path, that cyclone glide path that we showed you a few minutes ago. So there is expected to be a high amount of property and asset damage along the way because of the severity of the storm.
Well, one just hopes that it weakens sooner rather than later. The experts said 4 hours. Hopefully it weakens a lot earlier than the 4-hour time zone that it usually takes. Minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, auto majors continue to see weakness in sales volumes. Tata Motors saw a 20% drop, whereas Hero MotoCorp witnessed 17% decline in its April sales.
Standard Life Aberdeen's Mauritius arm plans to sell another 1.78% stake in HDFC Life Insurance via an offer for sale. The floor price of 390 rupees at a 7% discount to Thursday's closing price.
Hindustan Unilever may report single-digit volume growth for the first time in 6 quarters. However, the company's profitability is likely to remain intact.
It's a strong quarter for Blue Star as air conditioner sales have picked up. Revenues rise 18% with margins expanding to 6.9% versus 4.5% last year.
And Tata Power and L&T Infotech, on the other hand, report subdued growth in the 4th quarter.
All right, a minute left to go for market open. Let's get in those quick top technical trading calls from our experts. Rahul, why don't you start off with your top trading call for the day?
As of now, as I have a contrarian call in both index and call, I will just wait for some maybe 5-7 minutes and then take a call.
Okay. Shrikant, what about you?
Deven, I would like to trade with India Bull Real Estate, which is around 116-115 levels. Volume expansion activity is very strong, and the way the stock has shown recovery from the lows of 88-85, it is quite encouraging. So I'm expecting stock to move towards 125-126 again. So it's a buy at the opening, close to 115-116 levels, and we can keep stop loss at 113.
Okay, so India Bulls Real Estate from Shrikant Chouhan. Keep that at the back of your mind. We'll take in Rahul's call post-market open. Shrikant, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Rahul, stay on. We'll just take in the opening call post-market open. But here's how the markets are starting off this Friday morning. Flattish. Well, you could say that in line with what the SGX was indicating, the banks doing a lot better. Maybe Yes Bank is not playing small spot. It didn't play small spot yesterday as well, by the way. The mid caps and the small cap should come up on your screen, and let's see how they are doing. Flattish trades for the mid cap and the small cap indices too. So nothing much happening on the indices. Let's see if specific stocks are moving around. This should be. Yes Bank is the top gainer yet again. So after a 3% up move yesterday, another 2%. Bharti Infra 2 gains a little bit after yesterday's gain. So these two have been quite active the last couple of days. Oil marketing companies, not unexpectedly so, because crude prices declined overnight. So both of these stocks are doing okay for themselves. JSW Steel marginally higher. I don't know if the commodity crack is leading to the Hindalcos of the world correcting, but I can't quite see them within the list of the top gainers, at least not in the top losers too. But I guess the pocket to focus on is out here. Yesterday, the weakest index was IT, and in today's session, post Cognizant cutting its revenue guidance, IT's been right down there. So TCS, HCL Tech, Tech Mahindra, Infosys, and Wipro too. So all 5 Nifty 50 names, at least the IT pack is showing weakness. Maybe it's percolating into the broader end of the spectrum too, but the large caps certainly under pressure. So IT clearly remains the big sector of the day to be monitored. A couple of pockets of strength or weakness that I want to just point out. One, earnings impact, and whether we're seeing that happening on Blue Star or no, because the numbers were very strong. Not quite the impact, just about 1% higher. Let's see if it improves during the course of the day, but the numbers were very heartening, must say, if you are an investor in a Blue Star. What about stocks that have been very, very volatile the last few days? Bombay Dyeing, very, very, very volatile because of the whole Nesvada issue, but up about 8% right now. Eveready, after correcting 2 days on a trot, up about 5%. McLeod Russell, again, correcting 2 days on a trot, marginally in the green. Devina, what are you spotting?
Let's start off first with the Bombay Dyeing, which is up about 8.5%. Reliance Power moves up in today's session, 6.5%. Two stocks, the BM Ketan Group stocks, which had heavy sell-offs over the last two trading sessions, as Eveready and McLeod Russell, like Neeraj already highlighted. Both these stocks are trading in the green this morning. Godrej Properties is back up in trade. I think it had 6 or 7 straight days of cuts that brought the stock down from levels of 960, 970 to levels of 837 is where it's trading at right now. Voltas is up 2%. You've got Radico Khaitan up 2%. HPCL following suit with what BPCL and IOC are doing is up. Edelweiss, after making lows closer to 140, the stock's at 142.5. It's up about 1.8% in today's session, so not bad going. And 1% Beverages is up about 2% in trade right now. Losers, yesterday's big landslide move for Jet Airways, which took it down 17%, has carried forward into today's session as well. It's down about 5% in trade. Kansai Nerolac, disappointing numbers. Punished yesterday, punished today yet again. We've got JM Financials, which is down 3.5%. Intellect Design on numbers is down 2.5%. Adani Enterprises is down to about 2%. So still the breadth looks positive. 34 stocks advanced, 428 stocks in the red.
Okay, Rahul, quick thoughts. We have an interview coming up, but any trades that you're taking?
Yeah, it is a high risk call. Tata Power's after a bad result, the stock is showing some sort of resilience at the lower level. So we could see some sort of short covering from current levels. High risk traders can buy at current levels with a stop loss below 64, upside target 70 positionally.
Okay, so that's the call. Tata Power marginally higher in trade, and that's a high risk call. So keep that at the back of your mind. That's Tata Power for you. Deven Choksey, before we thank you, just a quick thought on IT. The stocks have started coming off after Cognizant cutting numbers, or guidance rather.
Yeah, Neeraj, maybe I think if you look at what Infosys and TCS have said, I think their guidance is remaining, pretty steady. I wouldn't probably, square this particular, or I wouldn't probably, equate this entire Cognizant guidance onto everybody in the IT sector. I think even the mid-size IT companies, wherever we have talked to, they are saying that they are in for some steady rate of growth, as far as the current year is concerned. And Infosys and TCS, both of them have confirmed that part of it. So for one, yes, certainly there would be no fresh allocation of money coming in from the global side, because they may want to play a little cautious. But I don't think that fundamentally the likes of Infosys and TCS would have any negative performance to talk about going forward. So I remain pretty steady as far as the expectations on the working from TCS as well as Infosys is concerned, not talking in general about the entire IT pack.
Okay. Deven, thanks for joining in today and giving us your perspectives. Rahul, thanks for joining in today and giving us your thoughts as well. Really appreciate. HDFC Bank, which is one lender which has managed to maintain healthy asset quality at a time when its peers have been plagued by bad debt, and the man at the helm, Aditya Puri, says it's thanks to the mantra of sticking to good old banking practices. He was speaking to Bloomberg editor-in-chief of Bloomberg News, of course, John Micklethwait, and Puri says that NBFC contagion may have been controlled for now, but the pain will linger for the next 12 to 18 months. John started off by asking Aditya Puri about growth concerns surrounding the Indian economy. Here's what Puri had to say.
Has there been some slowdown? Yes. Will we be there somewhere between a 7.9 to 7.4? I think that's a fair assumption. Economics was never a very exact physical science. So somebody's got to be right, but I think that's a pretty good growth rate.
And out of the various imponderables hanging over this, one thing people always talk about is the bad debts and banks. Now, you've done well on that. I looked, and your bad debts, gross bad loans are 1.36% against over 10% for the industry.
Yes.
What did you do differently?
I think what we did was a very clear definition of our target market, risk, reward, and constant monitoring if any of our fundamental assumptions were violated, i.e. either the margin went down or our default rate went up. And based on that, and we strongly believe in good old banking, I give you money, you give it back. And we need to So I think to some extent what happened was, at least for the large NPAs that accumulated was probably less than optimum assessment of the capital project risks.
Is that an oblique way of saying the state banks weren't very good at this?
I will leave it at what I said. I said that we didn't do that because we didn't find the risk-reward matching.
But by most measures, there is a massive gap between the private banks such as yourselves, which have quite low non-performing loans. Once you include all the state banks, it
Yes.
jumps a lot.
So did we need a lot of improvement in the state banks? I would have to say yes. Have we made progress? I would say substantial progress. So if you see what the regulator has done between recognition, one, it did an asset quality review. So we've recognized our past sins. Two, they set up mechanisms for faster recognition of problems. Three, they set up the bankruptcy code, and that some people had started thinking they didn't have to repay the bank loans. Four, they moved in terms of changing their inspection basis. Five, the government is moving in terms of consolidating the public sector banks to reduce the risk and improve better, because obviously State Bank and Dena Bank are not the same.
Do you think the election makes any difference in this? I'm not asking you to rate Mr. Modi or Mr. Gandhi, but would there be a change at all if we were to switch from the BJP to Congress in terms of how banks are treated?
The good thing in India is once things are in the public domain, it doesn't matter who's in power. This will achieve its natural course. So I think if your question is whatever is in place for the financial sector reforms, as well as processes, plus what is required going into the future, will that continue? My answer would be yes.
And is there one particular financial reform you'd really like to see?
Well, there are a couple of them. I think we need to have a debt market. I think we must understand that liquidity is definitely important. Other than that, I don't think there is that much, but that debt market says a lot.
If you just push on the debt market, that would mean India having a capital market more similar to
yes,
America.
Having a capital market with the interest-free yield curve with so that we can have what we call the bond currency and derivatives. So I think that will have to come about. They're working on it, but we do need that if we need to finance properly where the long-term financing should come from, where the short-term financing would come from, which needs a very clear look from ground level zero as to where the funds are going to come from, what are the assets available, do we need any reforms in our regulations, and I think that's in the process.
As long as I've been coming to India, which is sadly a long time, people have been talking about the idea of an Indian capital market. And one theory is that banks, such as yourselves, are actually quite happy with the current system because it means you're the only game in town.
That second theory I don't agree with because I can't make a lot of money that I would make in derivatives, and we are a major participant in the capital market.
You think it would be better for you if there was
I would think so, yes. It would also allow us to manage our risk better and introduce more products.
Can we talk a bit about other forms of competition? Well, you've had all these non-bank financial companies, and they have not always been a great success. You have IL and FS, they blew up last year. Is that mess being sorted out? And when roughly do you expect that to be sort of finished?
I think the NBFCs, and I think it's recognized here.
That's non-bank financial companies.
Non-bank finance companies actually needed to have regulated themselves better. But now the regulators are coming and putting in place. What happened was they had an asset liability mismatch. They didn't have a liquidity cushion. And they probably needed stricter inspection. So what has happened now is we at one time had a crisis. Now I think the crisis is gone. Problem still remains. So two things are happening. One is the banks have tightened up. Two, the regulators have tightened up. Three, these companies have slowed down their growth. Four, they're trying to dispose of assets and get rid of the asset liability mismatch. Despite all this, there will be some...
Did you have a kind of end date for that?
I would say within the next 12 to 18 months.
And that's also a fairly long period. Well, let's wait and watch. But almost everybody seems to believe that the pain will last for the next 12 to 18 odd months at least. That's a big interview, HDFC Bank, and you'll of course see it during the day on the feed. But on the other side, the other big interview on banking side, Axis Bank Sustainable Conservative Growth Strategy under the new chief Amitabh Chaudhry. Join in as he speaks to IRA. That's coming up on the other side. Stay tuned.